All right, what's going on, everybody? Okay, so today this is gonna be a pretty quick video. I just wanted to go through some of the earnings plays that I did today, and yeah, kind of go through that and see whether one of it was worth it, whether it wasn't. Calculate those sorts of things and really see the benefits and the costs of playing these types of positions. So let's get right into it. So firstly, I wanna very quickly, China and the U.S. has decided to push the deal, the trade deal back into December. The reason is because they're trying to settle out more information. Blah blah blah. They've been extending this for a long time. It's not really anything that I want to cover because it's getting kind of boring now. So, two big things that are doing earnings today or have done earnings at the time of me making this video are Qualcomm and Roku. So let's actually take a look at this. So this is the chart for Roku. I have a lot of lines as usual. So this is what they're earning on. They had an expected of 0.22, or no, they had an expected of 0.2. Yeah, they had 2.2. But either way, there was actually just a big sell-off for Roku. So I played Strangles for both of them. So I will go over to this side and show you. Okay, so here is Roku. Actually, you know what? Let's do Qualcomm first because I wrote it in that order. So, okay, Qualcomm. So, okay, here is the boy Qualcomm. So basically, what I did for both of these plays is I am playing a strangle on both of them. However, for Roku, nearing the end of the day, I started looking into some of their fundamental information. I was like, okay, something is off about Roku. Something is wrong. They're already expected to miss. Something is going to happen. And I anticipated that there's probably going to be a drop-off. And like I said, and I actually haven't said this, but when you get into earnings, more or less it's just gambling. Sometimes you can be smart about it and you can make some money. Sometimes you can't. I mean, earnings is dangerous. I think I mentioned previously on how we lost the majority of one account from just Amazon being, kind of indecisive about its direction, and that really kind of damaged us on that entire account. So that account it didn't get finished, but it's down pretty significantly. So yeah, I mean, once I get all the accounts, so maybe on this computer I'll start showing those. But for the time being, yeah, we got wiped out by Amazon on that play pretty badly, and so just keep those in mind when you start looking into this. So firstly, let me get into what's going on here. So, okay, over here I have a Qualcomm. So I bought two different positions. This is actually these are different calendar dates. So, for example, my put, which I actually had which I think in my opinion had a less likelihood of hitting, was set for November 8th. So it would expire this week. It would expire actually on Friday. But what ended up happening, as you can see here, is that Qualcomm hit, and so they performed well. They had good guidance. That type of stuff is what basically just draws this stuff up. Usually, I think they may still be in a conference right now. I'm not sure. Either way, they went up. It's not much. They went up about 4%, I think, 5% now. So this number calculation that I've done is a little bit off now because it's still going up. But either way, so I had a 73 put for Qualcomm that would expire this week, and that would be if they missed, it would be seen pretty negatively. So it would make sense that it wouldn't necessarily hit, but it would get close. 73 is around this mark point, and then my November 15th, which is next week. Yes, that's next week. If it were to hit, it would have to go up here. So we're off by a bit. I mean, Qualcomm is an interesting mover. If there are gaps for Qualcomm to be filled, it will fill them usually. But we are approaching right now. Actually, Qualcomm is starting to break into all-time highs because the highest Qualcomm ever was 34, and today it is hitting actually 90.89. So it is breaking into all-time highs, and that's something. Actually, the reason it hit all-time highs last time was because of a good earnings. So they did obviously beat in this time, and they did have better guidance from my understanding. I actually will go back and read the report just because I kind of want a decent understanding of exactly what's going to happen. Because, like I said, once you just playing this isn't just enough. You can actually take what is it called? The continuation, and the continuation can mean a lot more. Let me show you. So let's look into the last not last earnings, but last earning for Qualcomm. Now, they were going into earnings, they moved like insane amounts, but it ended up actually, it was so high that it was actually pushing it to go a lot higher. So we did push into the all-time highs, and it had this continuation. However, it did actually seem like the confidence had dipped off, the guidance or whatever. It actually filled in this massive gap that had been taken over. I think there's news for this. There's no way this is actually because of earnings. But going into earnings, they did perform well, and they kind of continuously do. It's a good company, fundamentally speaking. But I'm not here to talk about that right now. Right now, I'm just talking about like what happened with the options and what they're worth now. So, so I bought I bought the 73 puts for 13 cents, and I bought 5 of those, and it cost me $65. And then I bought the November 15th 94 calls, which is a little bit more likely now, especially now given its current position. And I bought those, and they're out a week extra, so I have an extra week on those. So if it were to continue in this direction, then I can probably take advantage of that. I could probably double up, double down, whatever the case is. And now the cost of this is 65, and the cost of this is 50. So you can do the math actually, and you can see this play wasn't exactly worth it, because if you were, to take out this play, we're not fully really recovering this loss. We're actually off by about $5. So that's a $5 loss on something like this. Maybe if it continues to move, which if you look at it right here, you can actually see that it is continuing its uptrend. So it could, maybe go back to 90, could go back. I mean, it looks pretty strong. Whatever initial rejection it did receive right here, it seems to be kind of pulling back from. So it looks good. I mean, Qualcomm has been moving, I think, pretty strongly for some time now. So it's not totally unreasonable to suspect that this might actually hit. Holy shit. Okay, love it. Wow. Okay. I love that. It probably, based on exactly this, let me look at the time and sales, but it looks like, it was 1,000. Yeah, it looks pretty good, but there was that one order, huge order. So based on just this, it is safe to assume that the conference call is actually still happening, or as just beginning. I don't know, one of those two. So it says it's starting at 3:45 my time, so potentially yes. Dipped right off and back up, so we'll see. But either way, if it holds, then that's great. If it actually comes around back tomorrow, then my puts could actually start making money. But it would have to move a ridiculous amount as of now, because right now, if you look at it, it's at 89, almost 90. If it comes down, it's gonna have to move. What, like not 17, is that math? Yeah, it's gonna have to move $17 down, which is very unlikely now. It was a slightly more likely here because we could anticipate maybe an $8 move downward, which would be 10%, which would be pretty drastic, but it was possible. It was very plausible. But now there's absolutely no way. So if it does actually end up coming down, this position is gonna get crushed. Whoops. This position is definitely going to get crushed, and this position will most likely also get crushed. So because, whatever the expected move is, they're not going to hit. So depending on whatever that is. So as far as we're concerned right now, we're going to assume that we're probably going to chalk this position up to a loss, actually, because we are not making up for this position here. And that makes a strangle not worth it whatsoever. So it really needs to move in order for strangles to work. And that's an important part about strangles to learn, is that, when you buy into a strangle, and this happened to me very early on with Tesla, I bought $250 on both sides. So I put in $500 on both sides of an earnings play, and Tesla did not hit the expected move. And because they did not hit the expected move, both my positions actually went down severely. And the worst part about it was, I was a complete amateur. I was in high school at the time. They ended up, They got crushed, and they were weeklies, so that was dumb. That's why I'm starting to learn about not starting to learn, but it is important to take a week out. It protects you from some of the IV, things of that nature. So, just keeping an eye on those is pretty important. So, but yeah, keeping these in mind, if it doesn't move anymore, this position will not have been profitable, and it would not have been worth it, and that's that. So, yeah. However, on the converse of this, we have Roku. So let me open up Roku here. Okay. All right, here we go. So hopefully Qualcomm will continue to go. It looks like Roku had, okay, so this is looking nice to me. Roku had actually dropped, I think, 8%. Let me actually get the exact numbers. These aren't going to be exact. Oh, wow, 16%. Okay. Okay, I was off by a factor 2. Got it. Okay, so Roku had dropped off quite a bit. Came up, took support at 120, which makes sense. I had not actually drawn these lines recently. These are earlier, so keep an eye on your levels when you're looking into stocks like this. You want to make sure, because these are levels, like 120 is a very important level, and it's a level where a lot of the support will be taken. So keep those in mind for sure. Yeah, and I think that's it. So as far as this is concerned, so it is at around 120. We've dropped 16%, so that's good. That is a proper expected move. Now I'm holding on this one. These ones are the same dates. I'm holding a 93 put, so I'm still pretty far off. However, I have till next week, especially for this continuation, and I am holding 2 of them. So I'm thinking possibly sell one at open and hold the other one for a while. So we'll see how that goes. My call is obviously going to hit 0, so I'm not going to worry about that anymore. What does matter is this position. So I did the math on this position, and so the approximate worth of the contract right now, given the IV, the current strike, and the current the date and all that stuff, and the current price, it'll be about 121 per contract. So that's about 100%. No, that's not true. That's not right at all. That is about 400%. So that's pretty decent. I'm making 400% off that. However, I am losing on this, so it's going to be probably, the profit is going to be it's going to be less. It's going to be like 180, which is not terrible. It's decent. It's a good play, assuming that it holds and assuming that the IV doesn't, shove it in a different direction, which it can do sometimes. So it's important to watch that, as we saw with Amazon. I mean, Amazon completely took off and then came back down, and I just realized I wasn't showing this. So yeah, so these are my positions. This is the one that's going to be 0. This is the one that's probably going to win. So assuming it holds, I can make approximately 242. So 180. So yeah, keeping that in mind. But I did something pretty smart. While nearing the end of the day, I ended up thinking about it, and I started going into. I went to do a Bloomberg terminal, and I looked into the what do you call it? I looked into the fundamentals and stuff like that of Roku, and I started figuring out that okay, maybe this isn't going to do so well. So I ended up actually buying a debit spread. So that debit spread is what I ended up doing is I ended up purchasing the 111 puts. And these are both, and this is also for November 15th. I bought the 111s and I sold the 110s. So it cost me, and this was on a completely bust out account. This account was worth, I think it had $16 in it. I paid about $13 for this position, near about the time that I bought it. Now it looks like I priced these as well. It looks like they were. They're hitting about the 111 is about 495, which makes sense, about 400% change, and then the 110s also hit 459. So the difference between this is about 32%. 32. So I'm making about 100% on that position, a little bit more than 100%. I'm making about. I paid 13, so about almost 300%, a little bit less on this whole position, which is decent. The reason, because like I said, I only had about $16 in that play, in that account. It was just a dead account that I was gonna leave till something happened. The reason that I did a debit spread instead of just a naked call, instead of getting 400%, is because I probably would not have gotten 400%. It is very unlikely that I would have been able to get an option at that price that would have netted me that amount. So, I mean, we can look at it if I go to the option chain. All right, let's go. So this is November 15th. So the one that I purchased was the 111s. So all right, I'm going the wrong way. Okay, so I bought it for like it's hitting 159, 146. I paid a little bit less than this when I bought it. But if you see, we moved about, how many strike prices? Like 7. Okay, one method that I do that's really like primitive. There's actually math involved in this, but I'll just do it without that for now. I probably bought it at around 140, so it moved about 20 strike prices up, which means these positions. So I did the math earlier, but these positions moved up about 22. So if I look, so 112 should hit about 132. So this and this isn't foolproof whatsoever. This is just counting. So the IV doesn't price it in, the change, all that crap. It doesn't work. But if you can look at it, I mean, the difference is about 40, which still kind of equates to this 32 that I have here. So I'm making 100% on it. But if I were to buy, say, maybe say, I don't know, this position somehow magically, because like I said, $16, so I couldn't have afforded anything else. So if I bought the 88s or whatever that were for next week, I could possibly make money, but odds are anything too far out are actually going to lose. That's usually what happens, especially with things like this. The IV is insanely high, and if it does not hit, then you're going to lose on it, and that's just how that works. So watching that, keeping that in mind is important when you want to play earnings. Earnings are a very interesting time, but more importantly, watch for the continuations of the rest of the markets. We're really in a very, very fucking like one of the coolest times in the world is right now, purely because of how things are moving, how things are operating. I personally, because I wasn't alive for the previous recession, or I wasn't sentient for the previous recession, but this is super interesting information. I mean, everything that we're getting, the trade deal, the way this is operating, I've never seen anything like this, and I feel like haven't really seen stuff of this nature, in this way, and that's really fucking cool. So watch that. Just keep an eye on it. Pay attention. You're gonna learn a lot, especially if you want this stuff interesting. You will really learn a lot, and it'll be very beneficial to you. Cause fine, whatever. This is $200. This is $120. This is $200. Whatever. Who gives a fuck? What really matters is the thing that you're getting out of this, which is the understanding of how international markets work. Local domestic markets work, international companies, large companies like this. You learn about it in a way that's it's pretty fucking fascinating if you really give a shit. So if you're here to make money, I don't know what to tell you, honestly. But if you're here to learn some stuff, this is a whole different game, baby. And so, I definitely watch for that. Watch what happens, because I mean, look at this. SPY's at an all-time high of 306, 307. Came down a bit today. Where I think we are actually down right now, are we? No, we're at 307, so we're pulling back up. The market's looking good. So if I'll show you right here too, honestly, because it's fucking awesome. Look, see, we're starting to build some strength back up. I mean, if we look at this, we're up 0.1%, which isn't a lot or even much, but I mean, that's not the part that matters. Not the after hours, not the pre-market, not that crap. The crap that matters is how a mass number of people kind of react to this stuff. So, keeping that all in mind will give you some advantage that I think people won't have. Like if you paid enough attention around this time, this was a massive fucking drop. It dropped like 20%. 15%. Okay, so not that massive. It was pretty huge. It was a little flash crash, I guess, but it is still really fascinating. And if you can learn about it, I think you'll have a huge edge in what it takes to just understand about the world in general. And if you keep watching these bonds, right? It's boring and they're just random numbers, but what do they mean? Like what patterns do you notice with time? You notice that hey, this is still higher than this was, even though they crossed back in August. Why now they're like 0.3 points away? So what does that mean, right? So keeping that is something that I think is pretty valuable, because what does it mean when the 30 year is really high, right? I mean, I think it's a bit lower now, but what does it mean when it's really high? It means that people are looking towards the future for they're longer term commitments. And then what does it mean when this is really low, and then the 2 year and the 3 year and the 3 month are really high? It means people are very, very short term, and that provides a different type of volatility. So keeping that in the back of your head as you start to learn about this stuff is really going to provide you some value, I think. And then on top of that, watching things like the TLT, the iShares 20-year treasuries. I mean, eventually this could actually start making a run up. So if that happens, then we'll probably end up taking some spreads on these. You can't really play this from a technical standpoint, not as much, not really at all actually. You can only take this from news and stuff, but it doesn't matter. If you can gather enough news, you can start seeing that you will probably see a ramp up again. As the market inverts or changes direction, more accurately, so will the TLT. And if that happens, that's going to be really interesting. Like, what are the chances of a global recession right now? And I mean, everyone talks about a recession, but what does a recession really mean? It's the contraction. It's the global contraction of production, GDP. So that kind of stuff is absolutely fascinating. I mean, people's lives are going to change within the next year, within the next 6 months, whatever the case is. Some people's lives aren't going to change at all, and some people's lives are going to change extremely drastically. So, I'm kind of rambling at this point, but I hope I provided some level of value today. So thank you for watching and listening. I'll see you guys next time.